Hello, folks. Welcome to the Bradcast. I'm Bradley J, and with me is Michael P. Moriarty, CPA. And he's here because it's tax time. And if you haven't done them yet, pretty soon you're going to have to do them. And you're going to have some questions. Maybe we can preemptively answer some questions. Maybe we can save you some hassles, some mistakes, maybe some penalties. Who knows? Certainly worthwhile. Michael, how do you do?
I'm fine, Bradley. How are you?
I am certainly very well. And I want to jump right in here and ask you, what are some of the common mistakes people make on their tax return, which could be avoided, by the way, if you had somebody do them? But if you're doing your own, and what are some of the mistakes that folks make that get them in hot water?
Yeah, I think the mistakes fall into two categories. One, the I didn't know. We have good and bad mistakes there, and two, just navigating the complexity of the tax forms. The I didn't know is people miss deductions. Some of the rules are a little complicated on how things should be completed on the forms. And even the simplest tax returns now are several pages long, particularly in the Massachusetts side, with different tax rates for different types of investment income, the health insurance requirement, and the penalties associated with not completing it right, the form correctly, and other things where clients are missing deductions or taxpayers are not aware of things that they can deduct. So those are the kind of two broad categories of things that we see errors and problems in the returns.
You mentioned the healthcare, the healthcare 1099 or the healthcare mistake. What's that?
Well, Massachusetts has had a health insurance mandate previous to the federal government mandate. And every year, people working in Massachusetts will get a form from their health insurance carrier, the 1099-HC. And that information is who your insurance carrier was, what your subscriber number was, the tax ID number of the carrier, and the months you were covered during the year for what they call minimum creditable coverage. So there is a Schedule HC on the Massachusetts return that has to be completed to prove or to document the fact that you had health insurance and avoid any penalty. What we've seen in mistakes is people have not completed that schedule properly, and then after filing their return, been assessed penalties. Now, the penalties can be abated once corrective action is taken, but keep in mind, most of the processing, if not all of the first round of processing of a tax return, is all automated today with e-filing. So we end up with notices being generated based on a machine read of the return, and these penalties are being assessed probably because people didn't complete the form right and complete the documentation. And it's tough to get a $2,000 or $3,000 tax penalty notice when, one, you don't owe it, and two, it's really just requires the form to be completed correctly.
There are some even simpler things that people make mistakes on. I guess I heard the number one problem is having the wrong Social Security number on the return.
Wrong Social Security number will cause it to be rejected. Something we see with parents and children quite often is parents are claiming a child as a dependent, but the child has income and has received a 1099 form. They may have had income tax withheld, but they're under the filing level of tax. So they want to file and get their refunds, which is great. The problem we run into is there's a box at the top of the form for the child that has to be checked that they are claimed as a dependent on another return. What ends up happening is the child files the return, gets his refund, doesn't check the box, and the parents file the return gets rejected. Now we're into filing amended returns for the child. There's no tax due, but again, it's a system issue where once a return is posted with a Social Security number, the system will not accept another return that way. And that's to prevent fraud for people filing multiple returns. So Social Security number is a big problem, as is improper when required to complete the tax ID numbers of payers or other types of recipients of payments, college tuition forms. A lot of different forms require the tax ID numbers, and if we're getting those wrong, the returns will reject.
Also, simply using the correct version of your name is a thing, right?
It
Whether
is.
it's did you use your middle name last time, or your middle initial, or it's got to be consistent, right?
It does, and it's got to match the name with Social Security, and that's another cross check that's done. We'll often ask people, somebody will get married. Oh, I changed my name. My first question is, have you changed it with Social Security, and do you have the new Social Security card? If not, the system will run a name database check, and if that name doesn't match the Social Security, then you'll get a kick out. We see that with children as well. Another thing, in rare instance, it happens, but if a child has two middle names, which has become a common issue, again, very sensitive the system is to matching those names up with the Social Security numbers. And then we get into issues where credits are disallowed and other types of corrective action that needs to be taken on these notices. So,
what about decisions people make on stuff they claim, whether it be dependents or expenditures for this and that, and they play a little fast and loose with that, and it's a bad idea? What kind of counsel would you give to folks as far as being conservative?
Yeah, well, I always say we're going to take every deduction that we're allowed, but we're not going to get into areas where we're going to be pushing the envelope on deductions. There are a lot of deductions available to business owners, and we work with the clients to make sure that they're aware of all the deductions that they can take, and going over things and making sure that we're within reasonable limits. Some things which would appear to be common sense when going on a tax form, they're not. Particularly for self-employed people, the health insurance deductions are handled differently than they would be for an employee. The retirement deduction is handled differently on a self-employed person than it would be on an employee. And a thing with employees is so many of the deductions have been eliminated in 2018 when they increased the standard deductions, basically doubled them, and then took away the miscellaneous itemized deductions, which were your union dues, your business use of auto, your unreimbursed office expenses, your tax preparation fees, your safety deposit fees, investment fees. Those deductions were eliminated when they increased substantially the standard deductions. So, there's really, people are trying to squeeze those onto the form somewhere, and there's really no place for it. So we caution, again, we're going to take every deduction, but we've had to go into the IRS handling issues with for other clients who had maybe someone else had prepared their return and made up numbers, for lack of a better word, and they seem to figure it out.
I can't imagine anyone would choose to make out their own tax return. Even when I was in the early 80s, when I was a bus boy at TGI Fridays, making, I don't know, 20 grand or something, I had somebody preparing my taxes just because I didn't want to make a mistake. One of my big problems is interpreting the questions on a form, interpreting them. Like,
right,
when they say household, who's included in a household? Does that have to be your wife and kids, or is that somebody who lives with you in the house? No idea.
right.
And I can't. Everybody, I recommend you. It's worth the money to get a prepare. If you find one deduction can pay for the preparation, right?
That's absolutely right. And there are some people who, if you have one W-2, okay, you don't have to necessarily come to a CPA or certainly a tax attorney to prepare a return. There are the locals, Liberty Taxes, and the other storefront tax shops, H&R Block, and even in Boston, your people in the various centers and down on the corner who can assist with preparing returns. But I always say that anybody that's a business owner should probably look to a tax preparer to assist just for those reasons. One deduction will generally save the cost of a tax return. And the other issue with filling out these forms, as I've said, there are multiple schedules now, and all of these schedules have to tie back into the main form. And the math error alone and knowing how the forms flow through the returns can often lead to errors and problems. So, we might have Schedule 1, Schedule 2, Schedule 3, all of these, and child tax credits, and the complexity of these in flowing through the return, particularly anybody that's trying to do something on paper, not recommended, certainly by me.
What are some deductions people do tend to take that do push the envelope? You hear people say, "Oh, you can deduct that, and you can deduct that." Yeah, maybe, but if you have to show up at the IRS office and justify that, can you really? What are some common? Probably shouldn't really take those deductions.
Well, I think one of the low-hanging fruit, as I call it, for an auditor, an IRS audit, automobile deductions. The documentation requirements on auto deductions are stringent. You've got to have a logbook. What does that logbook show? It's going to show the date, the miles traveled, what the business purpose of the trip was. And without that logbook, we've walked into the IRS, and the first thing they ask to see is the logbook. If you don't have the logbook, they're going to disallow the deductions. We have been told by IRS agents using the standard mileage rate, which I think for this year is 67 cents a mile for 2024. So it's a high rate versus actual expenses. Because if you're claiming actual auto expenses, you still need your logbook because you can only take that portion that relates to business use. But then you need all your receipts. And we've even asked for documentation of mileage when the IRS has asked, we've been asked for it. They want to see your receipt from your inspection sticker, you say for 23 and for 24, and see how many miles you've driven in that year. So auto is one. Meals and entertainment, again, what's the purpose of the meal, who attended, what was the business reason. Those are the travel. People are trying to, which is perfectly legitimate, couple business travel with personal travel. A lot of conferences in Disney World and Hawaii and places like that. So we just have to be aware of what the rules. It can be done, but those are the big things. And I say these are kind of the everyday expenses that we'd incur anyway.
Are there any expenses that people can deduct regarding doing a work from home? Like, it's pretty tough to parse out how much you used your computer for business and how much for not business. Or is there really nothing? Clothing, probably not, right?
No. Clothing deductions, it has to be specialized. So we do a lot of doctors, dentists, so scrubs and things like that. Office attire is deductible. People used to say to me back in the day when we wore a suit to work, "Oh, you can deduct your suits." No, you can't, because you can wear a suit anywhere to an evening out or what have you. So clothing, it's deductible if it's specialized and required as part of the job. Obviously, any type of a uniform. Home office is deductible for self-employed people. The deduction for working from home as a convenience to the employer went away as one of those itemized deductions that went away. And a lot of this came up during COVID when people were, working from home. There's just nothing there. But if you're self-employed and working at home and don't maintain an office, IRS just says it has to be your primary place of business. There has to be an established place within the residence, no kitchen tables, no living room couches. You've got to have an office. And then what we do is the relationship to the square footage of the office to the total square feet of the home is how we determine what percentage of utilities and taxes and mortgage interest, if you have it, or rent can be deducted. So, and then clearly a deduction, if I have a printer and I have toner and I have paper, those are 100% deductible. But we do have a lot of home office deductions with self-employed people. And again, that's something, again, why I say if you're self-employed, you should probably be talking to a tax preparer, because that home office is an area where I didn't know I could do that.
Right. Folks, I don't know if you're like me, I think it pays to be conservative when you're doing your taxes and not, as you say, not push the envelope. All right, just a couple more questions, and I regard record keeping. Actually, they regard record keeping and payment now with things going digital. I have questions about how long should you keep bank statements? How long should you keep brokerage statements? How long should you keep checks? How long should you keep your tax returns? I have like a significant part of my apartment is taken up by past stuff, and I'm wondering what to get rid of.
Well, the IRS can select a return for an examination in general 3 years from the date it was filed or the due date, whichever was later. So if I file my return on October 15th, 2025, they have until 26, 27, October 15th, 2028 to select that return for exam. So we definitely want to keep everything, and I say for 4 years, just in case. So a minimum of 4 years. Our policy is we keep for the 7 years, which is a generally accepted period of time. Tax returns, I keep my returns forever, just the return. Yeah. And I think the reason is I want to go back, if I ever needed to go back and look. One of the reasons that's come up lately is we've had a lot of sales of homes, the real estate market, a lot of sales of second homes, because the market on the Cape, the market in Maine has increased substantially. So if you've had any types of improvements to homes, we want to keep those records indefinitely until the return is prepared, because we want to be able to deduct those at the time of sale. The nice thing today is that generally everything is online. Why not, if you have a brokerage statement, you can keep that indefinitely, just in a folder on your computer or a drive or something. So those can be kept indefinitely. Bank statements, same. Really what the IRS would be after in an exam is for income. The first thing they want to do, give me all your bank statements. So if we were going to audit 2024, they would say, give me all your statements for 2024. So that's why we need to have those available. And then they're going to add up the income and compare what your deposits were to what you had on the return. For payments and deductions, they're going to want to say, give me a list of your deductions. And then they're going to want proof of payment. So we're going to want to see that canceled check or that credit card receipt. And then to back that up, they're going to want to see the receipts. So we just went through an audit of solar credit, where you see people putting solar panels on their roofs. So we had one selected at random for audit. What they asked for was the contract for the panels, the certificate saying that it had been completed, which was issued by the town, and all of the proofs of payment. Now, we had paid things electronically, and it was clearly on the bank statement, so we were just able to highlight those payments, send that stuff to the IRS, and we got cleared through the audit with no changes. So we definitely want to have things like that are support of the audit. Things that are not, if we're not deducting them, medical expenses really deductible, no need to keep those. Other types of medical expenses, telephone bills, if we're not deducting them, there's no reason to keep them.
No reason to keep them at all?
At all, I don't think. No, because we're really only keeping documents that support the returns.
Okay. So keep the tax return. You might as well. It's small. Keep them all. There's only one of them. Keep them all forever. Unless you're deducting something, you don't need to keep bank statements.
Right. I don't think so.
Or anything at all. If you're not deducting this or that, that you might have to prove there's no reason to keep it.
Yeah, not beyond the 4-year period.
Okay, so keep it all for 4 years, even hard copy, like even your credit card statements, even if you're not deducting anything.
Yeah, there's really no requirement anymore for a hard copy. When I was just talking about the solar credit and providing information to the IRS, that's all uploaded to the IRS now through a portal. So hard copies and wet signatures in rare instances are required anymore. They're just not required. They're doing everything electronically. Very few things do we still submit on paper.
So if you would need to justify something, you'd have access to it from your bank or from the brokerage.
Yeah, and that's generally what happens when we get into an audit and they ask for the bank statements. They either give us the information, we go online and retrieve the statements, or we're getting the statements emailed to us from the client. So yeah, no requirement for hard copy. We keep, if we're doing the books for businesses, we have a Dropbox set up where we're keeping copies of all that stuff on behalf of the client. So, and again, if it's electronic storage, we're not going in and deleting things. Once we have it, we might as well keep it unless it's clearly, not necessary.
You don't keep them forever though. You keep them for like 7 years or something like that.
Yeah, anything that we'd have on paper, we would keep for 7 years, and we're moving pretty much exclusively to electronic storage. So we're just coming out of, we're coming kind of to the end of our 7-year period where we still had things on paper.
I see. So you don't get rid of the electronic stuff at all, ever?
We're not. And I think,
Good.
It's just, again, somebody will buy a house. Do you need this? Yeah, send it to me. We'll put it on file. So we'll have it in the event that it's sold. And we've been able to do that for people that have sold a house. Oh, I don't know what I did with it. Again, you go to closing today and you're going to get an electronic package of all those documents where we used to get the the paperwork. But, yeah.
You mentioned that there's a three-year look back, likely for random selection of an audit, but there are exceptions to that where they can look back further, correct?
Yeah, criminal or fraud or things like that. Then things would get extended. What ends up happening is if you get selected and they're nearing the end of the period or the audit's taking a long time, they'll ask you to extend the statute. And then you're volunteering to do that. And in most cases, we do because we want to clear it. We're confident that what we've done is will stand up. So we end up extending the statute. So,
okay, and there are online choices for paying what tax you owe. How many people choose that? Seems like it's pretty simple. I've done it, and you can simply have them take it out of your bank account, right?
Absolutely. We recommend it. Yeah.
And there's no risk to that. You're not, your bank information is not vulnerable out there, because I know that's an issue for people.
Yeah. I've had people say, well, I don't want them to, I don't want to do it electronically. Then they'll have my bank information. Well, they also have it if you send a check.
Oh yeah, that's right.
So it's in there. We highly recommend, strongly recommend, can't recommend any more confidently, to make all payments online. There's very little room for error. When we're sending in checks, somebody's opening that, somebody's posting that. We have checks get posted to different periods. And again, then we end up dealing with notices. The volume of tax notices that comes out is overwhelming in many cases, because by the time it seems you can get acting on it, you're getting a certified letter with the same notice in it. So we just don't want to have to be researching and allowing opportunity for error. As you said, Bradley, there's no charge to it. If you pay by direct debit to your bank, put in the routing number and the account number, select the period, and it posts to that. So there's no real opportunity to have it lost in the mail.
I love that.
Yeah.
I love not having to go to the post office and making out that, fancy return receipt mail and paying for that. That's
right.
That's really great.
And
So
there's no
as
charge.
As you can see, folks, even with the easy return, it's not easy. And so I believe that it's so worth it to get a tax preparer. And by the way, I don't know if you are taking on any clients. If you are, how do people get in touch with you?
Yeah, we have a website, michaelpmoriartycpa.com. We're located in Needham, outside of Boston, and we're happy to talk to anybody. If you think you need somebody to work with your taxes, particularly business owners, that's our specialty, is working with, not our specialty, but that's our focus, is really working with business owners in their businesses. We'd be happy to speak with you. Always happy to have a initial consultation, no charge for that. You can contact us through the website. My email is on there. We have a contact form as well. And if we can help, we'll let you know. We do a lot of work with professionals, a lot of dentists, doctors, psychologists, law firms, consultants, things like that.
Cool.
So
the website is Michael P. Moriarty CPA.
CPA doc, that's correct. Yeah.
Okay, just kind of like if you just Google
Yeah.
Google Michael P. Moriarty CPA, it pops up. Because I
Yes.
did that, and it popped up all over
Yeah.
the place.
Yeah, we pop right up. So.
Well, I really appreciate you taking time out of the busy. This is tax season. This is crunch time. It must be a weird life for you. It's all this work in this one part of the year, and then there's probably nothing for a couple of months before something else happens, right?
Well, we play a few months of catch up and everything that gets pushed out. But the biggest challenge in our industry, our profession, is what they call compression. It's how do you get all the work done in what's turned into a relatively short period of time. I mean, here we are on March 13th, and we still, as of today and yesterday, people are just still getting tax forms from investment companies, and it's tough. We try and have everything in by the last week of March. That gives us, 7 to 10 days to turn it around and get it out to the client, so they have time to take a look at it and respond to us, and then we get it e-file for the deadline. The deadline is April 15th this year. As I've been saying, April 15th is April 15th. Usually in Massachusetts, it's we get a couple of extra days, but not this year. So we're losing a little bit of time, but we're ahead of the game, hopefully.
Okay, thank you, Michael P. Moriarty, CPA. Again, Google it if you're looking to get some tax help. That does it for today. Again, thank you so much for the time. And folks, if you know of anyone that might benefit from this, you maybe you've been talking at a party or something, they're talking about, oh man, I don't know what to do with my taxes. Well, share this video with them. Thank you very much, Michael.
Thank you, Bradley.
All right, we'll be done.